Everyone, this is Ted Bauman here, editor of the Bauman Daily, and this is your Friday Bauman Daily video. I'm also editor of the Bauman Letter and of Profit Switch. If you're interested in subscribing to either one, click on the little button above me, the iCard, and that will take you to a place where you can consider signing up. The Bauman Letter comes with a free trial, so you can try it out. Don't like it, you can get your money back, so there's nothing to worry about there. Today I want to talk about energy, but before I do, I just want to take the opportunity to answer a couple of questions, kind of random questions that have appeared in the comment section. The first one is, was that John Coltrane on my t-shirt the other day? And do I like John Coltrane? Hey, absolutely. Giant Steps is the most incredible piece of improvised musicianship I have ever heard in my entire life. There's no question about it. John Coltrane, probably the greatest instrumentalist who ever lived. I can't imagine anybody doing what he did with that horn. Second thing is, somebody mentioned, why do I like cricket? Why do I have cricket bats? Why do I wear cricket t-shirts? Well, I'm a dual South African US citizen, and my heart beats Protea green. I'm a South African cricket fanatic. Tragic. I love it. Every opportunity I get, I watch them. If it weren't for COVID, I would be down there, or would have been down there watching cricket, sitting at Newland Stadium for normally 3 or 4 days, because the test matches rarely go for 5 anymore. Last thing, I got a question or a comment from somebody the other day who said, inflation is technically the printing of money, not increase in prices. What? No. Inflation is the increase in prices. I've talked a lot about inflation lately. I'm not going to talk about it today, but let's be clear what it is. Inflation is the increase in prices. Whether printing of money causes it is another question. It doesn't always happen. Anyway, I just thought I would respond to that because I was kind of mystified at that. Today, I want to talk about why I am so bullish on specific segments of the renewable energy spectrum. Now, there's been a lot of talk about renewables. I would say that most of the excitement around renewables has been sucked up by electric vehicles, particularly passenger sedans, starting to morph into pickup trucks. We saw another one come out this morning from Canoe, which is basically just a CGI image of what a truck might look like when they get around to make them in a couple of years. Anyway, everybody has been focusing on that, but I think there's a bigger fish to fry, and that's where the big money is going to be made in the short term. Now, let's first look at a couple of charts that show the evolution of the cost of renewable energy. And this is going to lead up to an investment opportunity that I think is one you should be looking at. The first one shows the progression of the cost of essentially solar energy and wind energy over the last decade or so, and projected into the next decade. As you see, at the beginning of this last decade, 2010, the cost of a kilowatt hour of electricity generated from renewable was about 52 cents. It's now down around 10 cents. It's projected to fall to around 5 cents. At the utility level, it's projected to fall around 3 cents in the next 10 years. And all of that means that essentially the cost of renewable energy has dropped and is continuing to drop dramatically. Next chart shows just how that works out and how it's going to work out over the next few years. Right now, utility scale solar and onshore wind and natural gas are the 3 cheapest forms of energy in the United States. Coal and nuclear are significantly more expensive per megawatt hour, and natural gas is expected to increase relative to the others. But bottom line is that solar and wind power are already cheaper than nearly any other form of energy production in the United States, and they will continue to fall in price over time. Now, let's look at that in more detail. Here's a chart that shows the relative costs, or rather, basically their estimates of cost based on a number of different things of different forms of energy. Again, wind and utility scale solar are by far the cheapest. Gas is pretty close, but not quite there. Coal, significantly more expensive. Other forms of energy generation, things like nuclear, peaking energy, which is basically emergency generation to top up grids when necessary, is the most expensive. Geothermal, very popular in Europe, also still quite expensive, and so on. Now, what this shows fundamentally is that all the arguments about People who say, I've seen it in comments on my videos saying, all this renewable stuff is nonsense. Texas proves it. We're always going to rely on fossil fuels, etc. That's just simply not true. It's already not true. And there's nothing that anybody, including politicians, can do about it because this is being driven by market forces. If it's cheaper to produce electricity from solar utility scale installations, then that's what's going to happen. That is the way markets work. And so therefore, basically trying to hitch your wagon to, fracking and all this kind of stuff in the short term, yeah, sure, maybe you can make some money there, but it's a dying industry. It's a dying technology. It's not going to be around in 20 or 30 years. Now, this proves that. Here's a chart that shows the share of renewables in the annual expansion of electricity capacity at a global level. Now, essentially what it's showing you is that there are three things here. One, the gray lines show you the increase in energy capacity represented by non-renewables, basically fossil fuels. The blue lines show the increase in capacity every year generated by renewables. And then the red line is the share of renewables. Now, right now, the share of energy increase, the increase in capacity globally every year is 70%. Renewable, 70%. It crossed 50%, back in 2012, 2013. So again, this shows that this is not just a theory. This is, this is not just some upstart industry. It's here. It's already there. It's going to be everywhere soon. If you don't see it, in your neighborhood yet, just wait. It will. In fact, there is already electricity flowing into the grid, probably as you speak right now, from renewable sources, no matter where you live in the United States. Here's another chart that shows, again, the forecast in the role of fossils versus clean energy over the next period. This includes some backward-looking statistics as well, but it's pretty clear. Oil is going to disappear from energy production. Coal is going to wither away. That'll probably only remain in China and India and a few other places. Gas will probably continue, particularly if it can be extracted and used relatively cleanly. But the big winners, again, are solar and wind, as you can see going forward. They're just going to be the big thing over time. Now, that doesn't mean that investing in solar panel production or anything like that is the way to make money. I think already that a lot of those companies have become fully commoditized in the sense that their production is really, it's like microchips. They're being driven down to the very lowest cost level. So it's going to become a high volume, low margin business. And that's really not where the money is going to be made. Now we've established that the growth in renewable energy is unstoppable. It is the way the world is going to be in the near future. In fact, it already is that way. So the question is, where do you want to put your money? Now, I think a lot of people would immediately think, well, who makes solar panels? What about these utility scale companies and whatnot? Well, panels, I don't think are the winner. I think that there will be some growth in some sectors, but panels, solar panels, EV panels are basically like microchips. They're commodities. They're high margin, high volume, low margin businesses. They're going to be very competitive. You probably won't see a lot of opportunity for rapid growth in that sector. I think that the utility scale solar is a big winner. There are already a lot of companies. We hold some in the Bauman letter, some that have seen dramatic growth over the last year, over 75% in less than 6 months in some of the big companies that we hold in utility scale solar. But the big opportunity is in batteries, and I'm going to show you why. Here's a chart that shows the levelized cost of electricity for different types of energy. But notice that it is divided up into an interesting set of categories: bulk generation versus flexibility. Now, flexibility is the key thing. That's what we saw in Texas recently, that if you have renewable supply without flexibility, then you can get into trouble. We saw that in California last year as well. So the cheapest form of electricity per megawatt is what's called tracking photovoltaic, PV meaning photovoltaic. That's large-scale arrays that track the sun. The slightly more expensive is those that don't track the sun, then onshore wind. Then you get natural gas and then coal. Now, what's interesting here is that when you start looking at the storage equation, the cost of renewables do go up. And in fact, the cost of a non-tracked large-scale solar, that's the orange column, is actually more than coal right now. Now, that's because the storage capacity is so limited that the technologies for large-scale storage of energy produced by solar or onshore wind is still so limited. Now, interestingly enough, wind, because it's less capital intensive, is actually competitive with coal. But in terms of all the other peaking power options, like release of hydro, dams, that's hydro, reciprocal gas, utility scale, all that sort of stuff, all these things are more expensive than the option of simply trying to develop the battery storage capacity to complement solar. Now, I've spoken about battery technology before. I believe that it is the missing piece in not just automobiles, because we talk about batteries all the time with autos, but it's also the missing piece with solar energy as the main form of energy in the grid. Now, here's a chart that shows where this is likely to go from the International Energy Commission. Solar without batteries is going to continue to grow, but it will peak and begin to decline starting at the beginning of the next decade. Solar paired with batteries, on the other hand, is going to continue to grow very significantly. Now, this chart actually shows small-scale solar, which is residential and commercial level, like factories and small local grids. But it is the essential thing. It is the thing that makes solar possible, that makes it actually worthwhile investing in, is the battery storage. So this raises a couple of questions for investors. If you're not going to find joy trying to make money in the commoditized markets for things like photovoltaic panels, and if the big solar utility scale companies are going to be putting up more and more projects around the world, then the real focus needs to be on who's going to be able to make batteries at scale that can handle the amount of energy demands that comes overnight, that happens during a snowstorm, that happens during all the times when the sun doesn't shine or the wind doesn't blow, etc. And that's where I'm looking right now. I'm looking for the large scale battery. Now, one of the interesting things about batteries is that large-scale batteries are just small batteries that have been scaled up into large quantities. And that's where I find very interesting some of the companies that are out there. There's one called QuantumScape, goes by ticker QS. A lot of people have said, well, maybe it'll work, maybe it won't. They don't seem to be ready with their battery yet. But they're working on what they call a solid-state battery, a battery that doesn't require the basically the two poles of the equation, the whole, transfer of electrons, all that kind of stuff. It all happens in a solid state, which would make it extremely small. It would make it less weight. It would make it potentially revolutionary, not just for automobiles, but also for large scale solar and wind generation storage, the storage of that energy. So that's where I'm looking, and I would suggest you do too. I think basically that is the missing piece for the renewable energy sector, and I believe that the large-scale battery storage is going to be the one that is going to deliver the biggest returns over the next couple of years. Yes, we are at the beginning of a technological curve where we're still in the invention phase. We have not yet got to the mass rollout and innovation phase, but it's going to come soon, within the next 3 to 5 years. So if you want to make a lot of money in renewables, that's where I would look, in the battery storage sector at scale. Anyway, this is Ted Bauman signing off. I'll talk to you again next week.